Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. Can I please get a screen and audio check in YouTube in the Bookmap Discord Trader Lab community? Thanks, Dan. And good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream is about integrating Bookmap order flow tools with auction market theory, how the market works, and using a volume profile as a chassis to overlay participant behavior. It is also built with structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab community. And what the Trader Lab is a group of like-minded traders who have come together to leverage their collective experience. We all have different experiences. We've all come from different places. And the idea is take what works, and everybody finds what works for them, put it into a cohesive, organized process, vet them to see if you actually have a positive expectancy or edge, and over time, if you do the work and operate in a business that is statistically based, not predictive, you might, and again, it's all variable based on you, and assuming you can actually execute and do the work to create an edge, you have an opportunity to create a business. This is the purpose of the Trader Lab, and there's a lot of additional education in the Bookmap Discord server, stocks, options, crypto, order flow with a high tier tool like Bookmap, as well as other streamers, options, market maker behavior, and it goes on and on. The thing is, education is important. And today, many retail traders are out on the internet chasing maybe what might be an illusion. The only indicator you need, the one thing, do this, do that. I'm going to suggest to don't do any of it. You got to find out what works for you. And while the Trader Lab might not be a solution for you, I think anybody, in my belief now, can learn to trade. Whether or not you do the work, which takes time, develop a market understanding, how it works, why it does what it does, and how you might get in alignment. If you do the work, you might be able to learn how to trade. Then it's about psychological alignment and understanding that with statistics, you might, and I'm always going to say might because it's a variable, you might be able to actually manage your emotional states because you've taken something that is emotionally generated, which is randomness and fear, and you've created tangibility based on metrics, not predictability, but tangibility. And our model is the casinos. That's the basis of the Trader Lab. And of course, it's up to each individual to extract what works psychologically for them. I hope that makes sense. And in the Trader Lab, not only are these structured trades available at no cost, but also the community and library of webinars on the process that you see here every day. General disclosure, all Bookmap Ltd. Materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. And if we get into real time, we go there. The purpose of this stream is to help you understand how the market works. And it starts at the RTH open as far as the developing time frame, but it actually starts with a trade plan. And I posted in detail today's trade plan, and it's in the Bookmap Discord Trader Lab chat, and you can all visit it, and it's all posted prior. And I'm going to show you some things today that I often don't get a chance to show. Also, I want to remind you, there's a couple opportunities that Bookmap offers. Number one, there's a free digital version of Bookmap that you can download and with data, and I think it's crypto, but the point is you can see how these elements work. And then in the idea of order flow, I don't use indicators. So the idea of order flow is to see inside participant behavior. And the more timely insight you can develop might help you see structure, see who is on what side of the market, see transitions in behavior, and potentially give you more confidence to execute and maybe manage your trades better with potentially less risk. And again, it's another tool, and it's not a red light, green light tool. It's at another level. You can learn this if you put the time in, and I'll be showing it to you here in the stream. In addition, if you have a Bookmap subscription, you can also get coaching and mentoring, again, at no cost. These are some of the things that are available to you. So I'm going to show you something, and I said I'm going to do something different today. I want to show you the higher time frame, maybe. This is called a micro composite. This is what this represents. Now, this is a volume profile. And the thing about all this sounds very mysterious. It's not. It's actually simple. The thing is, if we don't understand something, of course, it's very complex, especially if you haven't been exposed to this before. Now, what I do might not be what others do, and that doesn't matter either. I have found what works for me, and I'm not saying anybody should do what I do. But if you follow these streams, and there's not only a library of them, but there's a ton of them out there in YouTube, you're going to see consistency on my part, not on the market's part. The market is random. So it's not about prediction. It's about alignment. And subject to how you experience the market in your fractal or time frame, you would then be adjusting your trade on an intraday basis inside of higher time frames. Let me explain what's going on here. We had a breakout, and you see buyers, buyers, buyers. Now, here we see two-sided trade. Here you see we go higher. Now I'm going to share common sense. What is under here and under here? So what we had was sellers, which puts shorts in the market. You'll notice we checked this level here. It's not material, except yes, it is. And it was too high. This orange line is a high volume area and it's off the chart when we were up here before. If it's still too high, right there, and at the time that was the level, we can reject it. That was a short. So we had longs going up, shorts coming down, and then sellers down here taking these longs out and then coming back into balance. So balance is where most of the volume is. So too high, come down, come back. Then we open, test a little bit, take out the stops on the upside. Now we have stops up here and down here. Just follow. Then we open, put in yesterday's high. Looks like it's going to the moon. Who knows? Then what do? The market goes up to go down, and the market goes down to go up. This is yesterday's high. It is a potential target for today. Now, potential is all you got in trading, right? No prediction. But if you look at the trade plan that I posted this morning prior to RTH open, taking into account where we were going to open and what the auction was, and you'll see all this in a little bit, it suggested north. Now, what happens after that is what happens. That part's not important. But if the market goes up to go down, what was sitting here? Sell stops, sell stops. What else is sitting in here? Shorts. right? And if the market goes up to go down, and the market goes down to go up, doesn't that suggest the potential to take this high out because the shorts in here have fuel here? Now, whether we do or not is not the point. It's we might. Now, there's another piece, one more, and then we'll get going. Now, I'm not going to go into what these are. These are basically what's called high volume nodes and low volume nodes. All these do, when you see this kind of thing, this is volume and a consolidation. I'm taking all the volume in here, and where's the highest volume? Think about what this is, a consolidation. Now, the market can go to extremes, outside edges, too high, too low. If the market's short, I can take that out. But right here, 56.25 is where the highest volume is in this distribution. And all distribution is consolidation. And the outside edges are called low volume nodes. You can see there wasn't a lot of volume, low volume node. And where the high volume is, right there, is like the mean or the fair price. So in a consolidation, it's like, oh, I'm not paying that. Oh, yeah, but it's on sale, retail. Now we can push outside of these levels and squeeze out the stops that are above here and take out the stops below here. So this creates the auction. And the market does go outside, who knows where. That's always maybe, and outside. So what I know right now is I have buy stops sitting here. Are we going to get them? I don't know. Does it matter? Nope. So that's the start of the day before the open. This is what I do, and this is what Trader Lab processes. Now, whether or not, somebody does that, not important to me. And whatever works for you, works for you. Now, I'm going to give you statistics. We're opening higher inside of yesterday's range. Grab a pen and paper. Before the start of the day, I have statistics. And while statistics are not predictions, 1 second, please. I gotta get some air going here. I got all these monitors, 1, 2, 3, 4, 5, 6, like 8 monitors running, and it's like hot. 1 second. I got to get some ventilation. So did you get your pen and paper? Let's go. Okay. So we're opening higher inside of yesterday's range. Let's go over some stats. Write these down. You're going to see how they come into play. And like everything, you have to vet these for yourself. Past performance is not necessarily indicative of future results. And write this down. The market is random. How it does its thing, if it does its thing, who knows? And if you come into this business and operate like a casino, how do casinos operate? The cards coming out of the deck are random, and how the gamblers play the cards are random. Yet they only use anchored structured games, and that's our business model. They only play games exactly the same way because the inputs are anchored, and the only way they extract their edge from the gamblers, or in our case, the other participants, over a large sample size is to use anchored inputs. So it's not variables. So these stats are part of those inputs, but it's about staying in alignment based on a narration of the developing time frame. So you're going to see how this works. I'm taking my time today. It's Friday. We have a great market, I think, to look at today. And you're going to just see I consider the real world of trading. And this is about building the business of trading. And if you're interested, the Bookmap Discord Trader Lab is available to you. There is no cost, and there's a link in the bottom of YouTube. You can download these structured trades. There's 60 PDFs. I'll flash them up on the screen in a minute, and and the statistics and everything else, and the community, which is the most important part. The leverage. We have good traders in the Discord Trader Lab. We also have everybody as a developing trader. I've been going on 45 years of trading, both professionally and sitting out here with you guys. I'm still a developing trader, and I will always be one because you can always improve. So here's the stats. The overnight volume point of control has an 82% probability. That's right there. We open on top of it, not so much. This is that micro composite volume point of control that I showed you. 56.25. This is the balance area. So you know where these are coming from. That's why I wanted to show you this. We have the overnight high. Let me find it. Has a 69% probability. That's nice probability, don't you think? We have 56, 42, 43, a high volume node. That's a potential target. We have these levels, potential target. These are the low volume nodes on the outside. Remember the top of those distributions. And we have yesterday's high, and we have the IB high. Now, yesterday's high, let me find it, about a 54% probability. And we have, what else? IB high. Did I give you the IB high? Don't know. About a 68% probability. So I'm leaning to the north side statistically. Now let me go further. This is called a naked volume point of control. It is the same thing as this, which is a higher time frame balance. This is yesterday's high volume. What do we know? In the ETH, this is the ETH low. Think of this like shopping. If I come down here, and who knows when, and I open up my, and I see I'm gapping higher after a sell day, that means the shorts are potentially on the hook, which sets up the stats going north. But if this is the high volume, and this is the ETH low, what does that tell me? And we didn't take out yesterday's low. So far, doesn't mean we won't. Then maybe this is too low. And if I open higher, and I have this is my balance in the higher time frame, I can go north of the border. So overnight mid, let's write that down. That's a potential target also. 72%-ish. And you have to vet these for yourself. So this sets up longs primarily. Now, is everybody tracking? This is the work. This is what I do, and traders who understand the auction, which anybody can learn, and have trade plans. Now you come into the market with statistics, and if you can understand, there's no indicators here. Understand the participant behavior. I read the participant behavior. And the reason I do it, as I've already used indicators, been there, done that, built trading systems, managed money, and what did I find out? I kept waking up in the same place because I was tuning, tweaking, and ultimately curve fitting, trying to get the market to fit into a box. The market doesn't work that way. The market is a real-time price discovery mechanism, and it'll do whatever it does. And after that, we don't know what it's going to do. Now, this is the RTH Open. Post your questions. If you're in YouTube, remember these streams are available exclusively to Bookmap Discord Trader Lab participants for review, screenshots, circle arrows to compare how they read the market and their operations. Also, to see structured trades as they develop. And I do it this way so you can see it. Otherwise, if I'm just sitting here calling trades out, if you don't understand what's happening here, then you won't understand why a trade exists. And of course, you can download the 60 PDFs. The goal is for you to reverse engineer this. So the stats are favoring the upside. Let's look at the first trades. Now, I'm going to be showing you trades that are structured in multiple time frames. I'm also going to show you trades that are optional in multiple time frames. In other words, counter trend. And I know we all like the trade. We like the action, the dopamine, all that. I get it. But It's alignment. And of course, here's the next piece. We all take stops. We all make errors. We all have bad days. We all hit our loss limit. Why? It's the real world. So you want to be in the business? Remember, the casinos pay the gamblers, and they also buy you cocktails and give you a ticket to the buffet. So, and maybe tickets to Adele if you leave enough dollars on the table for them. So this right here, let's label this. And I'm going to explain everything here. And if you have questions, post them. Okay? I'm going to do my best in the time I have. This is the opening swing high. What do we know about highs and lows in all fractals and all time frames? If I get, now remember, the market was sellers yesterday. If I get sellers here, where's my buy stops? Potentially here, above the high, or wherever that is, we'll see where it is. I get what's called VPOC migration. Let's watch the story. Remember, no indicators. Now, I do look at stops, and this is market by order data, comes from the CME. They got to know what it is going in the market. Is a limit order, a stop, what's going on? Icebergs also. So we get that from CME. It's part of Bookmap. It's a great tool. And this is the yellow lines, developing volume point of control. What this is like the VPOCs. The VPOC is the highest volume at the end of a session. This is, remember, the intermediate time frame. So we're in balance. We can anticipate two-sided trade. And we're right here at the retail price in the ETH. So this is what I anticipate. But the stats say north. And I know the shorts are in the market. I want to get the shorts. So if I get first selling here, my choice is, and I'm going to show you two sides of a trade, a short, but I know this buy stops are here, or don't take the short and look for the long. How do you determine that? Trade plan. So let's look. So what do we do? VPOC migration, too high, right there. Let's label it. This is process. If you follow these streams or look at the library or just cruise out on the internet, you're going to see one thing. Randomness in the marketplace, consistency in trading. It's the only way you develop an edge, because the outcome of any individual trade is random. So right here, too high in the microstructure. And this is what a consolidation, remember I showed you that big consolidation at the top of the stream? This is exactly the same thing, but it's a fractal. This is that consolidation, but it's in a microstructure. What is sitting right here? High volume. What does it say? Let's talk language. This is the language of the market. We open. I come up here. There's volume right in here. If my buyers can't continue, might I get? My sellers. Opening swing high. Now, the volume shifts down. Now I got more volume here, which is logical, don't forget, because this is the open. There's no volume, right? So I come back here to mid and VWAP. This shifts down. Theoretically, if I break below this, it might be a short. If you want to get short. I don't. My plan says get long. Let's watch. This is a short, but not for me. Why? The context is up. My stats say up. And let me talk to you about targets below, which I gave you the stats. This is a potential target. Doesn't mean it won't get there. In fact, if it does get there, I'm looking for a long out here, right here. And either it gets there or it doesn't. Not my concern. But let me show you now. Let's remember what this is. Too high. This is the high volume price. I'm not paying that. This is shopping. Now we have a consolidation here. The volume point of control, remember the high, all it says, this is I call the yellow brick road. It's saying there's more volume here than up here. So if I get more volume and it's too high and I leave it, it suggests I'm going lower. How about that? I get a little consolidation here. Let's just follow it. Microstructure. There's the micro high volume right in there. This is a consolidation. I'm in microstructure. I'm just following the yellow brick road in fractals. Too high. I come down here. Now I'm doing the same thing. Now I'm going to show you something interesting. What do I see that I haven't seen before? absorption. This is the absorption detector. Here is buy iceberg starting to accumulate. Now I had iceberg here, okay, but I broke low. Sorry, Charlie. Remember Charlie the tuna? And I go down. I get absorption here. This is the first time I'm seeing the absorption. So I come down here, and now what do I have here? I'm going to mark it for you. And again, let me give you the straight oil from the can. Clueless. And I don't mind telling you I'm clueless. Why would I say I'm clueless? Not ignorant, clueless. I don't have a location yet for a long. But here's what I do have. I have a consolidation. Now, I'm going to go into the order flow. I want you to see what's going on here. This is how you might use Bookmap. And it's just a thought. Absorption. Antenna now is up. And right now I do the chopateria. Now in the chop, it's a consolidation. Outside edge, outside edge. High volume is basically here. I think of these like stores. Very simple. And what goes on in a fractal? It's an auction. Let's now look at the order flow. So sellers are here. Buyers take a shot. No bueno. Too expensive. Sellers take over. I come down. I see buy iceberg, and a ton of sell stops coming out. 222. Now, why is that material? I'm getting sell stops, and on the opposite side of the stops, and who knows, right? These guys are accumulating. They need liquidity to take the other side. And you'll see stops, and you'll see them often. That doesn't mean it won't go lower. Remember, we're going lower from here. So I got to look at this, and I look at this, and I look at this. Sellers are here. Buyers, sorry, Charlie, down. Now what? Absorption. Now let's look into microstructure. Post questions, and I hope you're getting something out of this. If you're in YouTube, give me a thumb up. Give me a little encouragement to keep doing this. So I have my sellers here. I have accumulation here. Let's watch. I see my buyers here. Now I come up here. Where was my last delta? The red bubble is delta. In other words, aggressors. Now aggressors are sellers and sell stops because they become market orders. Delta can't differentiate. So I got my sellers, but I got my absorption. So I know I got absorption. Now I got my buyers. And up here, what do I have? My sellers were active here. If the sellers think this is too high, they're going to absorb buyers up here. What do I see? Buyer, but I'm not taking this out. What do I see? So I know if I can't take this out and this, I got my sellers still on the other side. So they're pressing, and that creates this outside edge low volume node. And I got my buyers. So I have buyers here, but they're not getting any love. And here's what I understand in order flow. And again, it's interpretive. If I have buyers and I'm not lifting out, then these sellers are still in control. That's what I know. I break down here. Now, there's absorption here. Now, right here, I have nothing to do. I'm going, and but I had my sellers stuck here. Sellers stuck here, sellers stuck here, and the buyers are trying. I break low. Now, this will fool you. Why? If the buyers are here and they think this is a good price, let's think this through together, and the buyers are here, these sellers were absorbed. And here the sellers are absorbing the buyers. Keep it in mind. The sellers take a shot again. They're still in control. The sellers make a new low, going to zero, right? But let's come back here. What was happening at this level? Buyers are here. Buyers are here. If I come out here and they thought this was a nice price and it comes on sale again, either they're going to get run over, the buyers out here, or the sellers are going to get absorbed. And I don't know, just telling you. Let's watch. Now you're going to see how order flow and all the pieces fit together. So I get buying icebergs under here. I get absorption here. And here's another piece. There was two. Now this is how I use stop and iceberg detector. Coming down, there was 222 sell stops. I make a lower low, and what do I see? 8. Only 8. I call that stop divergence. Remember divergence? Lower price, less of something. What does that tell me? Potential exhaustion. And even now I'm going, antenna, too high. Test. Where's my sellers? Where's my seller? I get a seller here. I'm still in the volume. I break high. All the sellers are now potentially under the bus. I get VPOC migration. Let's look at this. I hope this isn't too detailed, but you know what? This is trading, at least auction. Now you may go, oh, this is so complicated. I like my indicator. Yeah, I understand. I like mine too. But let's look at the change. If this changes and my buyers are above these sellers, and now the stops are here, and I get into the stops, and now this is the retail price. This is going to be a little funky. Just watch. Notice what we have. Let's come back. Whoops. I use a trackball. Sometimes I'm, because trying to run mouse over the desk, I got all kinds of keyboards and crazy stuff going on. It's a little hard. So this is too high. This is now retail. And in the microstructure, this white line is the retail and the consolidation. Fractals. I break high. Now, watch. Just watch. I'm looking for the long. Right here, I come down again. So let's look. I break high. I come down. I have 8 stops here. I make a lower low, only 2. Here's the other piece. Where were the buyers? Here. You see? So I come down here. I'm looking at it, and the teeth are chattering a little bit. I come down here. I'm looking for the long. And this is going to be my target. Right here, when I cross above, I get long. My stop is under the low of the day. My scale is here because this is my median price. Let's watch. My scale, why? Let's go back. This was the early retail price we rejected. The opening swing high is right here. The buy stops are above. I know this is just one trade, but this is it. Let's watch. Now, this is too low. Now, right here, it looks like there might be trouble in River City. I'm going to label this. Let me tell you what this is. I know, probably making you crazy. It's a low volume node. Remember I showed you at the top of the stream. What is a low volume node? It's an outside edge of a distribution. So basically, this consolidation, all this volume down here, this is too low. If I leave, and this is fractal, don't forget. If this is too low, and now the new retail price is here, I can rotate outside and come back. And there's a term for this. It's called mean reversion. I am trading multiple time frames, but I'm not using time. I'm using behavior. So this becomes too high. Let's watch. We are going for ultimately yesterday's high. That's part of it. And now up, now rotation. This changes the context. So we're in a higher time frame, up context, for me, longs only. Not saying you couldn't take a short, but my plan was get long from somewhere. And now if we're directional, now let me show you microstructure. I'm going to make you nutty because I'm going to show you fractals. And I'm not, now for me, there's two things that can happen right here. See if you don't see something familiar. Let me come back here. And if you want me to move on, let me know, because I'll move right on. I'll blast right out of here. This is the same thing that you're seeing down here. Chop, chop, chop. Buyers, selling icebergs, okay? And right here, going to the moon. Right here's volume. Break low. Come back. This was my target for my scale, right? Because of the stops. So I get the stops and the iceberg sell into it. Now, here's my volume. What's the change? Breaks down. Okay. This is where the stops are. Don't know. This break is a sell trigger, and I posted in TraderLab. You got two choices here. You exit, and then you look for another long, or your stop is way out here, and you're just sitting here sipping your pina colada. I know it's early in the morning, but it depends what time zone you're in. So let's look at this. When it does this, it changes into something called mean reversion. This is the mean. So what happened here is we got directional, and then the context in the fractal, or in think multiple time frames, changed from the bullet train to the rotational train. So this is a separate trade plan inside of fractal. So what this is trend up, and then we go into a rotation. Why might we rotate? We got the stops at the opening swing high. Remember, target, and this is target for the scale. I get the stops, then you might get a rotation or not, don't know. Where are retail traders stops? Here, under, wherever, because they trail them. Think like a retail trader. Don't act like one. Write that down. Think like a retail trader. Don't act like one. So in the TraderLab, you have two options. Trade management process that you have vetted, which means right here, out. And here's another one. Long, because now this is outside. This is your low volume outside edge of this distribution. So you got low volume here. You got micro high volume there. See if this doesn't look familiar to you. Too low. Too low. Too high. But you haven't gotten into the stops. So you hold through this because those guys are off sides. There's the stops, you see. Now we either pull back here and continue, but we break low. This is a short or an exit. It's a trigger in the TraderLab. Now, where's the next location? Well, this is too low, outside edge, and this is too low, outside edge. Micro high volume structure. Where does that come from? There. Because the market paused and checked the price. Just look. So I do this to kind of try to, keep my brain in alignment. So I mark these, or mentally mark them, because I can just see it over here. See that little node? So I don't have to, but I'm doing this so you can see it. So I come out and where are our stops? VWAP and mid. What's my retail price? It's here. The term for this is if the trend is up, and we could, certainly fall out and do the Acapulco cliff dive. I mean, that's always possible. But what do I see? This is called mean reversion. That's the mean. This is a long in the TraderLab, at least it was for me. That's my scale. Why? Mean reversion. That's the mean. And what else do I know? There's stops now above here. What else do I know? I have a statistic above me. What is the statistic? ETH high. You wrote this down at the top of the stream. I know you did. It's almost a 70% probability. Past performance not indicative of future results. And there's an iceberg sitting right here. This is the iceberg. It's been sitting since the RTH opened. I get that insight with Bookmap. So I know there's a seller sitting at a location. That motivates me for that. So let's look. Where do I come? Here. What might you do? Think about it. How about if you didn't get long here, along there, right back to the high volume? I added here. I scaled here. So what did I do? Got long here, scaled here, hold, pull back. I have my stat above. I have confidence in my stats, and I accept it's random. I added here. I scaled here. 2 shots. Watch. Overnight high. This was a target up here for me. Now, it gets interesting, doesn't it? What happens here? Let's go. And I'm going to come up and look at your questions. I apologize for not doing that sooner. But this is the auction, guys. This is trading in fractals. I don't use indicators. Now, let's look at this. See that little node right there? What created that? You know what created that? A microstructure, an auction. Now, we don't know where this will happen. So there's none of that. But let's look at this. Micro high volume structure. Break high. That means too low. I come up. Buyers. Going to the moon, Alice. What's this? Micro high volume structure. Break low. Change in behavior. Now this is resistance. You can see it there. And now what? Where's the stops? The market goes up to go down, and the market goes down to go up. So what do I have? Mid and VWAP. Do I know where it's going? Nope. Trade management opportunity. Let's just look. I pull back the mid. What might you do at the mid? Do you buy the mid? If the trend is up, where's the stops? Here they are coming out. What do I see on the other side? Let's look again. Iceberg buying. Now, I don't know, but there's my mid. Let's look at the order flow at the mid. Let's look right here. Sellers are here. There's the bubbles. No buyer here. Sellers are here. I got nothing going on here. There's the high. Let me move this over a little bit. Here's the high volume right there. Just going to show you. And then I'm going to stop. Now, let's come over here. Seller, 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 mid. Stops. Okay. Now what? Break high. Microstructure. Now, right here, it's a suspect. I have choices. I see my buyer. I'm above this seller. That's the first piece. This is absorption. I come down here. What do I see? How about nothing? Now, there is buyers and sellers. You understand that. But what I know here is I got a seller. And if I get above this seller, he is stuck. And so are the sellers in this little consolidation. And I got my volume here. Now, I don't know, what do I do? I see a buyer. So right here, this guy has a problem. I'm coming out of this distribution right here. And I'm bullish. Now, I don't know, where's my resistance? It's here. And where am I trying to go? Back to here. First obstacle. In other words, let's label this. So this volume in here, right in here, I'm just going to label it. So what I'm doing is I'm looking at the volume only in these fractals. And if I get buying here, if I get buying in here, I can get long, and I got to scale ahead of this. So let's just watch. Notice the reaction. I pull back. So I'm long, And my next resistance is here. Trader Lab. We'll just watch. Now, right here, micro high volume structure. Now, statistically, I'm looking for this, the IB high. Let's go back to our stats that you wrote down, about a 68% probability, past performance not indicative of future results, and the previous high about a 55%. And I know the shorts have their stops up here. So this is my target. Now, we missed it right here. Now, if I pull back, now this is also a trade management thing. Now, for me, I'm holding this, so I'm not getting out here. I'm just telling you, no. But look at this. This is a sell, and here's the micro high volume. Again, it's a trade management opportunity, or it's nothing. Let's look at the structure. So there's my selling right there. You see the absorption. Here's my selling icebergs. And okay, and again, right here, no clue. I break low. There's my high volume structure. Again, it's a trade management opportunity or nothing. And for me, I just hung in here because I'm playing the stats. And I know if I can get over here, they can really rip. That's what I know. I don't know what it'll do. I mean, I never do. So let's look. Look where we come. We test it. And basically, if you interpret this like language, it's kind of like, I'm not paying that. Let's come back and make sure it's too high. Now, right here, I'm looking for it to exceed this. And what I see again is my seller. So that creates two things, either an exit if you in your fractal, if you're managing, or you just leave your stop outside. Now, I pull back the VWAP in mid. What do I know? Here and here, it was too low. So I'm looking at this. My stats are still open. So I'm still on the long side. What do I see? Absorption, location. This is how I do this. I'm not saying it's good. I'm not saying it's bad. I'm saying it is what it is. Notice where we come. This was too low. I see what? Watch. Then I'm going to come up for air. So I see my sellers, the end of the planet. What's under the mid and the VWAP? Stops. So, okay, 130 stops, 42 stops. End of the world, Lewis. What is right here? High volume. But what is over here? High volume. High volume. So I know this was too low, and I left it. Well, if it's too low and I don't take it out, it becomes support. Now you're going to say, well, what about here? I didn't see any buyer. Did you? No. What happened here? Broke low. All right. What about this? Buyers tried here. Microstructure. What happened? Broke low. No good. Seller, seller, seller. End of the world. What happens here? Sellers. Buyers. Absorption. Now watch. This becomes a long. Just watch. Absorption. And now you get the fight. And where is the fight? Here. So I get high volume here, which is aligned with volume that previously, and this is a consolidation. You can see it, this. I break high. So for me, I got a long in here, or here, or here. Or if I'm more conservative, breakout and then a pullback if I get one. There it is. Long, stop under here. Watch. See? Now watch. Target, if it's in your plan, and then out the top. That's the plan. Absorption, I see a seller here. And then the whole thing goes to wherever it goes. Okay? Questions. Now I'm going to come up for air. And thanks for your patience. Please give a thumb up if you're getting something out of this. This is the Trader Lab. And please give a thumb up if you're in YouTube. It supports the channel. And remember, the Trader Lab is a no-cost, 24-hour, 7-day-a-week community. And it's open to all of you. It is really about the business of trading. In addition, there is a link in the bottom of YouTube as well as the thumb. You can download 60 PDFs of these structured trades, and I never put these together. This is from 2020. I didn't put these together as a course. The course, if you will, is real-time work and leveraging with other traders and interacting. You learn by doing, not by plug and play. I am not doing plug and play. It doesn't work for me. I am staying in alignment as best I can with the auction. Here's order flow. This is actual trades. Some of what I post are live trades. Some are screenshots like this. This is all live trading. So anyway, it doesn't matter. But the point is, you can download these. The primer webinar is available. I recommend when you come to Trader Lab, you click the link in the bottom. There's no cost for it. It's got over 30,000 views. If you don't watch the primer webinar, you don't know what's going on. Remember, I don't use indicators. Now let's look at this. Now I'm going for this, right? This is, remember, has a high probability statistic, and I'm looking forward to take out yesterday's high. That's all. That's my plan, and all this is posted in Trader Lab before the RTH open. I'm just following a plan. I don't know. Do you? So here I see my seller. I'm back at, what am I back at? I think, don't remember. Where was it? Here. I'm here. This is where I had this. So I get my long and I'm coming back to this. I need to, go through this. So what do? It's too high. I break low again. VWAP in mid. Now I know there's stops under here. And right here, the market needs to, if it tests this area, it needs to come back up. It doesn't do it. So we fell out of this right here, too high. And we missed this high, I think, by 3 ticks. Who knows, right? I don't. So and for me, I manage my trade. So for me, it's just a matter of, somewhere out here, and I use high volume structure, so for me, it's out here, and I get taken out of my runner. All right. Then we can go from there. But I'm going to look at your questions first, because there's more. Questions, guys, and thanks for visiting Trader Lab. Hope you're getting something out of this. This is auction market theory. Yeah, disclosure, I don't do stocks. This is specifically how the market works. You can apply this process to any market in any time frame. If you're a swing trader, if you trade options, you can use, and you have to vet everything for yourself, of course. Stocks, it works fine. Bookmap works great on stocks. I mean, you could see where the orders are sitting, where the market makers are, So it's all the same, as far as how the market works. But it's, and in the Bookmap server in Discord, you can see stocks, you can see everything in there. I focus on the ES because of its liquidity, its harmonic rotations, and as an educational platform. But this can be anything you want. Gold, crude, jelly beans, doesn't matter, because this is how the market works. So anything that auctions and has liquidity, this is how it works. And then you got to vet any specific market. Like you want to trade NQ, it's exactly the same. But the depth of the market in the NQ, like here's our depth. If you go to NQ, it might have 14. So you'll get skidded. So you have to adjust your risk parameters based on depth and the idiosyncrasies. Just saying. Hope that's useful. And by the way, I just want to remind you guys, if you're late here, there's a link in the bottom of YouTube. If you are interested in the Trader Lab community, there's no cost, and you can access all the resources of the Trader Lab plus the Bookmap, Discord server. A lot of different education, options education, market making, specific things, So, and there's, more than one way to slice the enchilada. What I have found is the closer you can get to the real-time behavior and learn how to interpret it, the quicker if you're using order flow, you can react and adjust your behavior and triggers. And all this needs to be vetted. And all of this is available in TraderLab. And remember, if you're just tuning and tweaking and optimizing look back, all you're doing is curve fitting. I did it on steroids with trading systems when I was managing dollars, you know. So right here, it all goes south of the border. And there's no way to know. So for me, I don't know. So I don't worry about knowing. I figured out a long time ago I can't predict. What I can do is stay as best I can in alignment with the changes in behavior. That's what I can do. And I've removed the need to be right because you can't, casinos don't have the need to be right. When they pay the gamblers or the other participants, it's overhead and cost of production. That's what a business person does. An emotionally attached person is trading their feelings and their fear. That doesn't work in this business. You will go out of business if that's what's driving you. They impulse in. They seek dopamine. And all you really got to understand the mechanics of what's going on under the hood in your head. If you are making errors, it's because you don't know where your edge lies or you can't control yourself. And most of the time, the lack of control comes from not understanding what you're pushing against. Your primal wiring is to avoid risk and pain. You know, saber-toothed tiger kind of concept, run the other way. So no matter how intentional you are, and I found this out for myself because I had a lot of intention, you know, trade plans, rules, boom, boom, boom. And in the moment, something else is sitting, moving the stop, skipping the trade. If I take a stop on the last trade, what do I do on the next trade? Is it a unique moment in the market or am I trading the last trade? Things like this. You need to understand these mechanisms because they'll take you out of the business. That's how important it is. We work on that in TraderLab. You have questions? Let me see if I can help you. By the way, remember down in the bottom of YouTube, if you're following this, you've been a regular visitor to the TraderLab, I need your support. This is all I'm asking, and that's the thumb up in the bottom of YouTube. Also, copy the link. You might be able to watch this over the weekend. Typically, these are not published. They are private to the Bookmap Discord TraderLab community, but if you keep that link, you might be able to watch it. I can't say. If you want to download the stats and the 60 PDFs of these structured trades to look at and ponder, plus watch the primer webinar and have access to the library of webinars, there's the link in the bottom of YouTube, and there's no cost for you to do that. And then you join the community if it resonates with you. And if it doesn't resonate with you, it's all fine. But you don't have to, quote, pay to find out. And I can assure you, if you come to TraderLab, it's going to probably change at least how you understand the market. I'm not saying it'll change anything else for you, because if you want to build a business and you want to become a high-performing professional, you're going to have to do something different if you're not already a profitable trader. By the way, everybody has winning trades. I know for me, early on, I'd see patterns. Our brains are wired to see patterns. We'll throw an oscillator, moving average, stochastic, whatever it is, MACD, Fibonacci, Elliott Wave. I don't care. I've done all of that stuff. And I'm not saying it won't work for you. I'm saying what I found, I had beliefs, and then I tried to make my trading fit into what I believed. I didn't understand the patterns I was seeing would also work randomly. And if you closed your eyes and flipped the coin, if you could catch the darn thing, heads or tails, long or short, you could actually have winning trades, wouldn't you? Because it's random. Once you understand that everything is going to have a winning trade, even without an edge, you might then change what you believe in the sense of that you just have to make it better. I call that Trader Groundhog Day. I did a webinar on it because that's what and I coined the term for myself because I kept doing the same thing, believing I was on the right track, when in reality, I was not in alignment with the business of trading, which is a metrics-based business, not a predictive business. and not just seeing randomness and thinking the answer's in the randomness. I just got to make it better. Well, if it has no edge, you can't make it better because you're always curve fitting to what happened in the past. If that's you, you might want to come to Trader Lab because we all do that, or we've all done it. So it's okay. This weekend, I'm going to recommend to all of you that are visiting, and even if you're in the Bookmap Discord Trader Lab community, step back. What are your goals? What do you want to achieve? What about the education you have gotten? How is it actually making you a profitable trader? Or are you not profitable? Why do you think you're not profitable? Is it just persistence? Well, if you're waking up in the same place, it might be your process and your beliefs that might not have anything to do with your hard work and dedication. You can work real hard, but if you don't have a model that has an edge, it doesn't matter. I know for years I worked really hard, but I kept waking up in the same place, thinking it was just more persistence. By the way, let me show you something here. Oh, I remember. There's another trade here I forgot all about. Let me tell you about this. I don't think I narrated this trade, guys. At 9:30, we get the IB. Remember, in the statistic, favored the IB high. That was the longs coming out of, when did we make that high, guys? I just got to go back and look at this, make sure. Yeah, it was up here. Okay. This is a long. Let me show it to you. So we fall out the bottom, and this is the IB low. We have a statistical target at the overnight mid. Let's come back real quick. I don't think I covered this. I don't remember. 72% probability. Fooled me. And then we have this, the first hour low. Now, taking out either the first hour's high or low is a 97% probability. Past performance, not indicative of future results. Statistically, it was going to be the high, 67% probability. The low, about 58% probability. That's why everything was north of the border. Once, and early on, we came down, right? So once I came down here and took it out, check this probability, surprised the heck out of me, and I didn't get below it. Right here, we have a structured trade, and it's called the IB failure. I made this one up because I used to always get stopped out. And what I do is I look at behavior and I go, what's going on? So these trades are trades I created over many years. And when I started doing this, I learned market profile in the mid-1980s from the guy who created it. And I decided I'd really be smart. And I used my indicators with it, make it better. That was about 2 years thrown away. So I hope you don't do that because I did it. So this is statistic. Notice. So I hit the statistic. If I was short, it's a target. Me, not so much. I'm deer in the headlights, like what's going on? And I had a great morning. So I'm sitting here and I have a trade going this way. So right here, let's come back to the long. I hit my target, I break under. So now, here's what I know. Micro, and I don't know this until hindsight, so don't think there's clairvoyance. I break here, range extension. Stat, nothing to do. Stat, nothing to do. Break high. What's here? Resistance. Sellers. Who knows? Break high. Clueless. Now, IB, I come back above it. And I'm looking. I have microstructure here. And I got my sellers up here. I got my sellers in this leg. I had buyers here. I got absorption down here. There's the icebergs. There's 796 sell stops. Thanks for playing. Broker sends you a gift basket. Now, sellers again. Looks like it's going to zero. I don't know. Hits my stat. I don't know. Buyers again. What does this tell me? Remember, if I see absorption and my buyers come in, the way I look at this is not that this is the low, it's a suspect. I need my structure. Sellers again, buyers up here. Okay, so you see what's going on. Come down again. Take this out. It's going to zero. But what happened? Look at where the overnight mid is. I got my statistic. Now the antenna is up. I use statistics. So what's here? My buyers are here. Now, why did we go lower? And why did the buyers come back in? Let's look at the rationale. These guys were absorbed. If you think this is a heck of a deal, and the sellers are on this side, and you are accumulating, and here's another little trick. Let's look. 109 sell stops coming out. What do you see here? 11. What is that? I made up a term. Stop divergence. Ding, 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 ding. Buyer. The guys who bought over there are the same guys buying over here. IBF, structured trade, trigger, long, stop here. Where to? There. Watch. Now, I should say mid is the first target for the scale. So target and then this. So what I think I post, I don't remember. I post these in the Traders Lab. Now I'm going to show you something else. This was too high, variable high volume node. This becomes statistically too low. Structured trade back here to the mid for the scale. And ask me why. You're going to get sellers at the mid. And maybe they're right. Where would they come? Potentially out here. My stop is here. Now here's the next piece. When we come up here, let's just watch. I get my shorts. Where do we come? Back here to the high volume. Now I need to get through this. Let me label it. And this is called a low volume node. Let me explain. And I'm going to stop narrating this thing so I can focus on you guys. But I'm very, I think if you come to Trader Lab, you can watch this. And now you can see the auction. This is a distribution. We fell out of it. Too high. I'm not paying that. Get out of here. This separates the distributions. This is an outside edge. So I know if this microstructure is too low, and this thing is too low, and I get along, and I have a structured trade, the IBF, called IB failure, that I can come to mid, and that'll be the end of it. Or, now here's where it gets interesting. I can rotate down. I have my shorts here, and where are the stops? Above the mid and the VWAP. Where's my next target? It is here. VPOC migration. What is it saying? Too low. Too low, too low. Potential to continue higher. Outside edge, and then maybe out the top. Who knows, right? And we don't. Where's my outside edge? Let's look at the structure. You might like this because I know this was too high, this is too high, and I rejected the high volume there. You see the logic in all this? Now, what I don't know is what's going to happen. This is part of the random distribution of outcomes. Think how the casino works. They don't know. How can I know? But I do know this, which is this consolidation with the high volume here, the shoppers left the store. Let me put a little node here for you at the high volume. I'm going to show you the logic. So this is fractals. So there's a little one up here, right? Too high in the microstructure. As I go up in fractal or time frame, this is this distribution or auction. Oh, I'm not paying that. Yeah, but it's on sale. Yeah, but and the high volume is right there. You can see it on the profile. Let me just put a little line on here. Now what? I get my long. I have my scale. Well, you scale at the mid, or you get the long outside, mean reversion, back to here. And where was it too high? Let's look. Where'd it go? Here. You see how I use the targets? Why? Outside edge, rejected. Here. Where does it go? There. Can I predict? Nope. But I can target. You see? Then what? Then it all falls apart again. All right. You know? So that's okay for me. Now let's go a little further. Here's our IB, right? Which was our long. And all I'm doing is trading around these rotations, you know. Now this sets up a different trade. Let me show this one to you. Now the fact we failed up top, and notice, now I'm getting into more advanced stuff, guys, so I just want you to forgive me for this. This was too low, and off I went. I rejected too high. I break low. Now I have another structured trade here. If this was too low, think support and resistance, and this now, my low volume node is here. I think it was here, but so outside edge, okay? So, but this was support. Support becomes resistance. Break low, pull back to here, outside edge. There's the location. Break down. I'm back under here. This sets up a short. Pull back to here. Pull back to the microstructure, which is, let me label it. See, what I'm doing is I'm trading what you guys think of as time frame, but the clock has nothing to do with this. This is a short, or, so you could do the following with this. You can sell here. You can sell here. You can sell here. Your stop has to be above this. And then you're going for this is your next target, not a recommendation. And why, do you ask? Last statistic, and I'll look at your questions. The statistic is 67% probability. And again, I have no idea. You know, doesn't matter. Now, if you are on a short from any of these locations, the thing is, the more you can get into micro, the more, and you understand the auction, the tighter you can operate with tight stops. And we all take stops. If you didn't get in this trade until this microstructure here, or this up here, all these are potential shorts, but you have to vet them. See the microstructure even here. This is a short. This is a Trader Lab trigger. If you download those 60 PDFs, you actually be able to see them. Now, I'm not recommending anybody do anything, right? I recommend you learn how the market works. And then, because this is not indicator driven, but how about this? Suppose you could learn how the market operates. You think then you might better be able to deploy indicators? And what is this? Isn't it a short microstructure? What is this? Let's just look. Microstructure. This is the target. And if we get through here, this is the target. I believe 55.80. I can't see all my charts. Are you guys getting something from this? I appreciate a thumb up in YouTube. Remember, there's a link down there if you're interested in what this is all about. The Trader Lab is a no-cost community. And while it's no cost, which I think it'll continue, hopefully, and I continue doing this because I do have challenges. I cannot. I manage my trades when I stream, but I don't initiate because it's not in my plan. Sometimes I do, most of the time I can't. Because I can't walk and chew gum. I'm multitasking. It takes 100% commitment. No emails, no phone calls, nada, zippo. Otherwise, you come out of the flow. So I want to be in the flow. So if you take this trade, you'd be risk neutral. Then you just hang out subject to your plan. Does that make sense, guys? So if you're on a short and it's a minimum 2-lot configuration, your job is from failure, from the distance from entry, wherever it is, to failure. That's where your stop is going to be, right? Well, on a 2-lot, then you need the move to cover the risk on your runner. And I only talk about 2 lots minimum for developing traders. Then you manage your trade. You get taken out, you get taken out. Or you leave your stop out here and you say, well, I'll either give it all back or I'm going to get to a target. So for me, I do a bit of both, But for me, I know where the stops are. Where are the stops? Yesterday's low. And this is a target, and this is, for me, I just might go to here and not care about this. On a 2-lot, and it's the ETH low. And there's not a high probability I take both of these out either. Because we took out the ETH. I'm just going to mention this to you. So I managed the trade. Let me just see if I can find that. 24% probability I take this out. But I have this as a 70% probability-ish. Past performance not indicative of future results. So am I going to be concerned about 24 or am I going for 70? That's why this. And this also has a good probability of getting taken out too. Just saying. Questions, guys. And please give the thumb up in YouTube. Remember, if you're in the Trader Lab, you come to Trader Lab, use the link in the bottom of YouTube. And I want to remind everyone, if you're late to the stream, the Trader Lab community is like-minded traders who have come together to leverage their collective experience. You can access a library of webinars, 60 PDFs of these trade types that you can reverse engineer. You make it your own. You find your groove. There are traders that are going to trade 3-4 point rotations. Me, I'm kind of a fan of the 15-20 point. Why? Because I take stops. So how do I get paid? I want to pay for my stops. So this scalping mentality doesn't work for me. I've been there and done that. I've been a high volume trader. I used to trade 100 times a day and more at times, in NQ primarily, if you want to abuse yourself. And what I found was my broker did really well. If I had a good day, I would do okay. If I had a bad day, my broker did really well. So I was always, I had a lot of overhead to trade that way. So even if I had a great day, I was giving 25, 30% of it away. And if I had a bad day, I would go 25, 30% in the hole more. So, and I worked for a long time to try to, to fix it. And I figured out was my skill, if I overlaid what I did on the larger rotations, it paid. So I changed, I used to use 6-tick scales, 6-tick stops when I was doing that in ES. I'm not going to talk about NQ, it's a little different because of the skidding. So my managing risk in NQ is a lot more difficult. And I traded it during the dot-com bust, so you know. So let's look at what's going on here. Microstructure is here. We have a buy trigger here. If this comes out over here, the trade is over. That's as difficult as this is. If I come back inside, then we can squeeze these guys out. That's it. If you're managing the trade, this is a micro buy structure. Now, the thing about the Trader Lab is you have your trades planned out. In other words, you have a plan. You would be short, you'd be risk neutral, your stop would be out here. If we come out here, the trade's over and you followed your plan. That's how you rate yourself. It's not win, lose. It's edge. And the edge is distributed over a large sample size. If you don't manage the trade, then you're hanging out here and your stomach is churning because statistically this is where we might go. Any final questions here, guys? Hope you're getting something out of this. And if you're visiting in YouTube, try copying the link up there. I don't know if it'll play for you because these are not public, but I'm just going to encourage you to watch it over the weekend, see if any of this resonates with you. If it does, click the link down there and you can come to the Bookmap Discord Trader Lab, take advantage of everything. Here's the other thing. If you're interested in Bookmap, there's a free digital version that you can check out. It comes with free data. I think it's for crypto, but you can kind of look at it. And here's the thing about all high tier tools. There's no red light, green light. We all want a red light, green light. I get it. We want an ATM in the basement too. I don't think that's going to happen with red light, green light. Now, if it works for you other than inconsistently, because we all have winning trades, I'm telling you, you might think you have a process and you just have to make it better. Remember, Trader Groundhog Day. If you're waking up with Trader Groundhog Day, all it means is you're stuck in the random distribution of outcomes, but without an edge. The casinos also have a random distribution of outcomes, and they're in a random environment like we are. The only difference is they have structured games with fixed inputs, not random inputs. So like we have multiple indicators and this, that, and you throw it all against the wall and then you curve fit it. You don't see the casinos playing their games that way, but we do. And also we are emotionally triggered. Casinos are not attached to the outcome of the next hand. They accept that they're in a random environment. They accept that all businesses have overhead and cost of production. And you accept that? That's the business of trading. Please give a thumb up in YouTube. Final questions? Repeat, I'm not off anything. Repeats in the, I don't know when you asked me the questions. Now, this is called VPOC migration. This is important. This is like the higher developing time frame. Now, here's what can happen here. I already know what my next trade is, and there are never trade recommendations. Here's the following. If I cross above this, it's going to take me out of this trade. Then it turns into something called mean reversion. My next location is going to be up in here for a short, back to here and out the bottom. That's a structured trade. And guys, it's not a trade recommendation. I take stops all the time. And then, I don't want to sound insensitive to how you feel, but you got to get over it. The casinos pay the gamblers all the time. You see? I know how we feel. I get it. I do too. But the fact I feel something is part of my wiring. It is not this business. You want to be in the business, develop a career in this business. We really got to work on it, and I'll work on it with you. I believe anybody can learn to trade if they do the work. I'm not ever going to say you individually will be able to trade. Most traders are looking for easy. There's no easy if you want to compete. You're competing against some of the best minds on the planet. I've worked with quants, that I work with a quant who managed over $1 billion. And I'm going to tell you, you're talking PhDs, brilliant people that, could put a rocket on, on Mars if they wanted. They're competing in this environment. Are you going to do what other retail traders do? Or maybe do you want to differentiate what you do from what most retail traders do? And we know the outcome statistically for retail traders. So it's up to you. I'm not saying you should do this. And I'm certainly not saying what you do is not, there's no right or wrong. The way you determine if you have the potential for longevity in the business is what you're doing, what your results are. P&L is not how you judge yourself in this business. We all can have winning runs. I certainly did when I was doing system design. But over time, it was continually breaking down, and I was continually fixing and optimizing it because it was system based. So I had a belief that I could stay in alignment because the quote market repeats itself. Well, what I didn't have was the idea of the randomness, and that going back and curve fitting had nothing to do with what's happening right now. So I had to change my beliefs. And I'll tell you, I spent too many years trying to fix a process that was not in alignment. Outside edge, stops are up here. And where's our stops? Out in here. Variable high volume node. Right in here. Now, if I get taken out and I get a selling structure, I can put this trade right back on again. I'm not saying I would. I'm saying I could. And and I'm not recommending anything. I see my sellers here, my buyers got absorbed. If this is going to go higher, it's got to clear this structure. If it does go higher, it's going up here. If it doesn't go higher, it's coming back here. That's as deep as this is. Hope you get something out of this, guys. Copy the link if you're in YouTube, if you want to watch this again. Or better yet, come to Trader Lab, use the link in the bottom of YouTube, check it out. Download those PDFs that I showed you earlier. There's 60 of these things you can take a look at, and you'll see what I'm doing here. The other thing is, what I'm showing you in the stream has advanced components to it. When I did this, and this is like 2020, I was not streaming. Bookmap asked me if I would do this, and I had a debate with myself whether I would, because I can't trade. Like right here, I'd be taking a short here, you see, and I would go for this. That's all I can tell you, because this is now what? Mean reversion. Here's what I know. I can come out here. I get my break. I get my test. I have a short. This is my target. If it squeezes out here, trades over, I have my next location to come back here. This is mean reversion. That's all it is. And this is a context that you could learn in the Trader Lab. We don't know what'll happen. What we do know is why this was too high, and that it's a location. And this is also the outside edge. I mean, it can come further. And here's the other thing. But this is the target. And then if I get below here, I'm back to here. If I can't get below here, I'm going to squeeze that out and go here. How difficult is that? If this, then that. If not, then what? Please give that thumb up in YouTube. Helps me and the stream. Come to Trader Lab if you're interested in understanding market mechanics, and take advantage of this free chat as long as it's available. Thanks, guys. Look forward to seeing you. And Trader Lab, remember, this stream's available exclusively to you to reverse engineer, screenshot, and compare to what you did today. And together, we can all get better. Thanks again, guys. Appreciate you visiting the Trader Lab today. Have a super weekend.